Hello and welcome to UK Property Accountants. In this video, I'm going to share with you 8 common blunders that landlords make with their tax returns in the UK. These mistakes can cost you a lot of money and hassle, so make sure you avoid them at all costs. 1. Not declaring all your rental income. This may seem obvious, but some landlords think they can get away with not reporting some or all of their rental income to HMRC. This is a big no-no, as HMRC has access to various sources of information, such as letting agents, online platforms, and third parties, to check if you are declaring your income correctly. If you are caught evading tax, you could face hefty penalties, interest charges, and even criminal prosecution. So always declare your rental income in full and on time, and keep accurate records of your income and expenses. 2. Not claiming all your allowable expenses. On the flip side, some landlords miss out on claiming all the expenses that they are entitled to deduct from their rental income. These include mortgage interest, council tax, water rates, insurance, repairs, maintenance, agent fees, advertising costs, and more. By claiming all your allowable expenses, you can reduce your taxable income and pay less tax. 3. Not using the right property tax structure. Another common blunder that landlords make is not choosing the best tax structure for their property business. Depending on your circumstances, you may be better off operating as a sole trader, a partnership, a limited company, or a trust. Each option has its own pros and cons, such as the tax rates, the reporting requirements, the liability protection, and the flexibility. You should consult a professional property accountant to help you decide which option is best for you and your goals. 4. Not taking advantage of tax reliefs and exemptions. There are also some tax reliefs and exemptions that landlords can benefit from, such as the Rent-A-Room scheme, the Property Income Allowance, the Capital Gains Tax Annual Exemption, and the Principal Private Residence Relief. These reliefs and exemptions can help you reduce or eliminate your tax liability on some or all of your property income and gains. However, you need to meet certain criteria and conditions to qualify for them, so make sure you understand the rules and apply them correctly. 5. Not planning ahead for capital gains tax. Capital gains tax is the tax that you pay when you sell a property that has increased in value. The rate of capital gains tax depends on your income tax band and whether the property is residential or non-residential. For residential property, the rates are 18% for basic rate taxpayers and 24% for higher and additional rate taxpayers. For non-residential property, the rates are 10% and 20% respectively. However, you can reduce your capital gains tax bill by using your annual exemption, offsetting your losses, claiming reliefs, and timing your sales strategically. 6. Not keeping up with tax changes and updates. The tax rules and regulations for landlords are constantly changing and evolving, especially in recent years. Some of the major changes that have affected landlords include the restriction of mortgage interest relief, the abolition of the wear and tear allowance, the introduction of the stamp duty surcharge, the extension of the capital gains tax reporting deadline, and the changes to the non-resident landlord scheme. These changes can have a significant impact on your tax position and cash flow, so you need to keep up with them and adjust your strategy accordingly. 7. Not filing your tax returns correctly and on time. Filing your tax returns correctly and on time is essential to avoid penalties, interest, and inquiries from HMRC. You need to file a self-assessment tax return every year by the 31st of January and pay any tax due by the same date. You also need to file a capital gains tax return within 60 days of selling a residential property and pay any tax due by the same date. You need to make sure that your tax returns are accurate, complete, and consistent, and that you have supporting evidence for your income and expenses. 8. Not getting professional advice and support. The last and perhaps the biggest blunder that landlords make is not getting professional advice and support from a qualified property accountant. A property accountant can help you save time, money, and stress by taking care of your tax affairs, advising you on the best tax structure, claiming all your expenses and reliefs, planning ahead for capital gains tax, keeping up with tax changes and updates, filing your tax returns correctly and on time, and dealing with HMRC on your behalf. A property accountant can also help you grow your property portfolio, maximize your returns, and achieve your financial goals. So, there you have it, 8 blunders that landlords make with their tax returns in the UK. I hope you found this video helpful and informative. If you need any help with your property taxes, please get in touch with us at UK Property Accountants. Thank you for watching, and I'll see you in the next video.